So my name is Natacha. I'm with WestSummit Capital. I'm the director of VR there. So first of all, I just want to say that I really believe we're in the good old days of VR. This is the fun time when we can do anything we imagine. Some quick numbers. I know most of you were at the DigiCap talk this morning, so I won't linger on it. And we have Marco from the VR Fund who will get into this in detail. Oh, you can't really see the top. Well, anyways, investments in AR and VR reached 1.1 billion this year as of March, this data is. That's nearly 2x from 2015. So that's a lot, and that's awesome for a lot of you who are hopefully starting companies in VR. 800 million of that went to Magic Leap, but even beyond that, excluding Magic Leap, it's still a 20% increase from last year. So it's a really good time to have an idea in VR or AR and to go for it. VR VCA represents 30 of the top VCs, and that's there's about $2 billion to deploy in VR and AR. Oh, sorry, 20, no, 2.
10 billion.
10. Oops. Well, okay, so Marco is the expert, and now I'm going to be blushing the rest of this presentation. Okay, so moving on. So how did WestSummit Capital become interested in VR? I'm just going to spend a few slides on this. Some relevant investments. We're going to have fun. So there's a problem with VR. VR can be lonely. Once upon a time, games were lonely too. I think this is really important to me because I don't want to feel lonely at the end of the day when I get into VR. I want more. And WestSummit Capital invested in Twitch, and social equals fun. So we have an idea of where this is going. And VR is also a drag on your GPU. I don't know how many of you guys developed using a Mac last year with your DK2. It's pretty awful. It's a drag. So next level of immersion in VR is going to require way more processing power because we want magic. We really want magic in VR. So the GPU-intensive tasks in VR were moved to the VPU thanks to Nvidia. So they are an awesome company that we also invested in. And so all that great stuff that we want in VR, like eye tracking and hand movement, hand recognition, object recognition, all of that is made possible thanks to this chip. So we're very proud of that investment. Anyways, that said, VR is also really hard to make. We all have ideas that belong in VR, but it's still pretty hard to make. Once upon a time, video games were hard to make too. We invested in Unity. We led their last round. 80% of VR and AR is made using Unity. You probably all know this, including Pokemon Go. So I guess I can't be here today without mentioning Pokemon Go a few times, so here we go. And shameless pitch, so these are so it was built on Unity. That's a guy catching them all using a Segway, which we also invested in. And yeah, so Pokemon Go, as you all probably know, is the biggest mobile game ever. So now let me introduce my panel. We have Marco from the VR Fund. So here. I think if any of you have put a deck together, you've probably used his landscape slide. So he invested in Spaces, Immerse VR, Limitless, and the Rogue Initiative. Oh, by the way, I'm just going to introduce you guys for you so we can just get into the meat of it. Gavin, he invested in AltSpace, Spaces, NextVR. You're seeing a pattern here, I'm sure. Teppei invested in Spaces and VR Chat. He runs GREE Capital. Rikard is at HTC Vive. And he runs their app store there and also started Women in Tech, which is something really important to me, and we'll get back to that. We'll save time to talk about that more. And I introduced myself already. So I'm going to leave it there so you guys can make associations. So in part one, I'm just going to be just deal with the bells and whistles of actually like how do you get money. So wait, first of all, how many people are raising money right now? Okay, a lot of you. All right. And how many of you know you want to do something in VR but haven't quite decided on what you want to do? Cool. Okay. So I'm going to ask the panelists, when do founders know that it's the right time to ask for money? Like, what do they need? What materials do they need? Like, real specific in VR. Let's see. Gavin.
Well,
first of all, thank you very much for having me. My name is Gavin. I'm an investor with B Capital Group based here in San Francisco. We're a new venture fund that is linked to the Boston Consulting Group, as well as other strategics in the media landscape. In a recent role with Comcast Ventures, I invested across the VR and AR ecosystem. And I would say that the answer to your question, Natacha, really kind of varies based on the stage at which the investor enters the market space, right? So in general, right now, I think the VR and AR ecosystem is early and starting to reach that point in the curve where investment is accelerating. And you're getting both mainline venture funds and strategics seeing a lot of interest in the space. Now, it will ultimately mature, as we've seen in other verticals in media. But I think at this stage, it really makes sense to know who your audience is. So if you're talking to a seed fund or Series A fund, they'll be looking for different things versus a strategic or slightly later stage fund or mainline sort of Sandhill VC that's investing across multiple stages of growth. So with regards to the former category, I think that the most important thing is to have a real compelling view of product market fit, specifically what you're building and who you're building it for, and the team that can execute against that vision. So, depending on what you're looking to do, that could be a combination of hardware, software, computer vision, it could be firmware, it could be content development. And so tailor your pitch and tailor your team development and construction based on the product that you want to bring to market.
So are you just saying that we need to know the check size and have a good team, but do we need a deck? Do they need a deck? Do they need actual demo? And if so, how much of the experience should be built out?
Great. So let me just address that quickly, and then I'd love to pass it on to get comments from the other folks that are up here. But to complete the thought, I think as you move into later stage investors, if you're at the Series B stage or later, and there may be some of us in the room that fit in that category, I think you're really looking for commercial traction, right? So to some degree, be able to point to downloads and perhaps user pay. It's very, very early for that, but contracts around distribution or upfront payments from distribution partners that can point to long-run sustainability of a business versus a product. So what is the medium in which you can present those thoughts and ideas? It is, I think the language of and the currency of communication in venture is typically a pitch deck. So that is, a 15-slide deck where you spend an hour and talk an investor through why what you're doing is exciting and a good candidate for investment, and expect that what comes out of that is a discussion internally within a venture fund on level of excitement, fit with the thesis that the fund is pursuing, and then a set of memos or other communication internally where the deal team, the partner you're pitching to and the team around him or her is making that case to the rest of the partnership who may not be as close to VR and AR. So the more you can arm whoever you're speaking to with the right facts and paint a compelling story using that format, a pitch deck, and references and diligenceable items around that to point to your team and why you'll be successful, I think the better you'll move through that process and that pipeline. So I'll pause there.
Oh, thank you. Go ahead, Marco.
I have a different opinion on it.
Okay.
Well, different in a sense that I think all of our investment, we had to see something from the founding team. It had to be a product demo, IP demo, whatever they're working on. We really wanted to make sure that their vision is manifesting in some tangible product that we could see. And, part of the challenge for VR is a lot of people are coming into this new medium. It's a brand new medium. It's a spherical experience. And as we saw, I'm coming from a mobile gaming background, a lot of PC console talent couldn't transition to mobile game. We're also seeing similarly mobile console and PC talent are not transitioning to the VR in terms of taking advantage of the medium and really providing this magic that you talked about. So every investment we made, we had to see something from the founding team. And I think that comment is very true, but we put more emphasis on the product and tangible demo than the deck.
So, and do the rest of you agree with that? That you have to see something?
I think that, of course, you need a business plan. And I think for ViveX, which one initiative that we have today, where we have a $100 million fund, what we are looking for is not necessarily seed, so like just a couple of people with an idea, but I agree with you that there needs to be a team or a demo or some sort of substance that has that product market fit that you referred to as well. So I do think that if you want an investment, you need to have a business plan. You need to have sort of a prototype or a demo or something. So I think that the more that you have, the more you're going to keep of your company.
Thanks. Okay, so there's a burning question that I have. So what is your policy when you say that when you're not interested or when a founder doesn't get an email back? How should they interpret that? And what is your policy in saying no? And then the follow-up is, when should founders circle back? So what in general, what do you guys like to see? Marco?
This is really a sensitive subject for me because I do not like VCs telling the founders it's not a good fit for us. And you don't know why, you don't know what the fit should have been. And it really makes an easy escape, saying, well, I don't want to upset Melanie because she's going to come up with an incredible idea later on, so I want to really sort of leave on good terms. I don't think that really helps the entrepreneur. So we are deliberately telling the team why we don't like the idea. And I get on the phone, I try to do it in person, but a lot of times it's not possible, and say, look, you are incredibly talented. This is a C- experience. The product doesn't reflect what you know and what your background. You guys have an incredible pedigree. My experience was horrible. Here's what you can do. I also say, I may be completely wrong, but at least you know why we're not moving forward with you. I think, in my opinion, that really helps because both Tip Ted and I have been entrepreneurs, and hearing it's not a good fit for us and we'll see you later doesn't really help anyone. Anyway, that's our strategy.
Okay. Unless somebody's dying to answer that question, I can move on. Okay. Okay.
Yeah, so I would add the following, which is, if an investor is really interested in your company, I think you'll know, right? So you'll get, a full court press on, here's a diligence request list, this is why we're leaning in, this is a value we can add, and let's set up a whole slew of meetings with you and your team to get deeper into the details. In the absence of that, I think you can probably surmise that while there may be interest, and I think, what you would really want to do is develop a relationship early to get to that point down the road, they may not be a specific fit right now. And I think the way that you take that is in a couple different ways, and sort of some of it is also a function of how the feedback is given and how the past is communicated. So from my perspective, I think it's very important to always close the loop. So, we use different tools to manage our deal flow pipeline, and I make it a point to pass within a week of a meeting that I've taken. Sometimes that slips, but generally speaking, I hold to that, I think, about 95% of the time. And I pretty much always pass by email, because from a scalability standpoint, it's very hard to call everyone or do it in person. I think if we're down the path where you're, diligencing an opportunity, have issued a data request, are really digging in on product and speaking to multiple members of the team, you obviously don't pass that way, but you communicate your reasons for it and you do it live. But I think in the vast majority of inbound pitches, I'll either say this is not a fit right now, and I'll give 1 or 2 sentences why, or if I've dug in and spent the hour, then I'll write a longer email explaining exactly the reasons for that. And I think in the receiving of that, I think I would encourage entrepreneurs to try and get as much value from that as possible. So one, really dig and follow up on what are the 2 or 3 things that could be different, so that if I take a slightly different direction, I should call on you again or not. So the most important thing in all of our careers is time, and managing that effectively between running a business and fundraising for capital is obviously a delicate balance. And then 2, the other thing I would say is if there's a strategic value to this conversation, if you're talking to a fund that can give you access, have them provide that as a point of validation for you to come back down the road. For example, if you're talking to a strategic fund linked to a media company, say, can you make an introduction to an IP holder or a point of distribution in your set of assets in your value chain, so that I can speak to them and kind of answer sort of their questions and perhaps develop a relationship for down the road. And really the answer may be no, but you should still ask. And so I think those are some of the ways to handle the pass. It's always delicate, but there's a learning experience both ways.
That's really interesting. So they should feel comfortable just saying, hey, how about introducing me to this person that I know that you know, or this IP holder. Super cool. Good to know. Okay, so let's talk about social VR. So I think social VR, I know social VR is really well represented, and I want to talk to Teppei a little bit. So we were talking about, so you've invested in VR chat, which is definitely one of my favorite user-generated social VR platforms. It's really fun if you guys haven't tried it. You can fly around on a magic carpet and drop through doors and just do really weird stuff, and you should definitely take the time to build a crazy avatar. Anyways, and then Gavin's invested in AltSpace, and I know that there's some other investments in social VR. Thinking just big and broad, what do you guys want to see? What kind of companies do you want to see next in terms of social VR? So not like the usual multiplayer, the stuff we're used to, not another Void, but what could you imagine? Not to tell you guys what to build, but let's just like toss around some magical ideas.
Yeah, I think I can answer to the question. So before diving into the question, my name is Teppei Tsutsui. I'm working for a company called GREE. It's a mobile gaming company, but we recently launched the VR-focused fund with about 12 million under management. So it's like I'm running that fund out of the San Francisco office. So thank you for having me here. So we invested in VR chat because we believe as a social gaming company, as an original social gaming company, we believe in the social VR and social, because of the VR of, you can be in imaginary virtual space. Social aspect is more like getting stronger than the real life. And we like the concept of VR, a social VR chat, because you can interact with the people within the virtual reality space, and you can create anything you want using the Unity function. But for going beyond that, what you can imagine after a social VR, so I'm just kind of using my imaginary power that if you look at a company like AI, so that's offer the borimetric, photometric 3D capture. So I want to see something like you can dive into the a virtual world with an actual figure of yourself, just reflecting that in the space and talking to the other people that's also see a lot of their actual face and actual body just moving around. So that's kind of I never seen that company before, but I love to take a look at it if there's one like that.
Thank you. Yeah, Rikard, do you want to be?
Yeah, I think the way I think about social is that it's kind of prevalent across any experience, because if you think about VR, it's very much around experience things, and we want to experience things together with other people. So I do think that it will be a layer which will be very critical to any experience. Doesn't matter if it's business or if it's fishing or whatever the community and whatever the passion is that's driving it. However, it's interesting if you look on mobile apps, for example. If you look at number of apps in social compared to time spent on social apps, you can sort of see that, of course, there are very few social apps and people spend a lot of time. So it's kind of an oligopoly between a few giants who basically control the space. Whereas if you look at gaming, people spend a lot of time on gaming, but there's gazillions of different gaming apps. So it's a very fragmented market. So I do think that there will be, the established players will, of course, bring their communities and their social graphs into the VR space. And hopefully everyone else will be able to leverage those social graphs in your different experiences. However, as we've seen with, I don't know, Snapchat or Instagram, you see the rise of someone who really understands in that case, the mobile medium, who will understand the VR medium. So there might be a rise of completely new players, and hopefully then VR chat will be one of them.
Yeah, so you're circling back on this idea of VR native. So I guess what Marco was saying was that you think it's important for an idea to be VR native in the sense.
I'm sorry.
No, go ahead.
Yeah, in a sense, yeah. Part of it's given this casual connect game industry crowd. There are a lot of studios are now doing VR and AR. In addition to what they've been doing before, PC, console, or mobile games. For us, that's really a tough investment, just because our pure focus is VR and AR content, games, and enabling technologies. When you have a studio that does both, it'll create a challenge for us as an investment profile. But should I comment on social VR? Yeah. So social VR, really, by the way, yesterday, Richard Marks from Sony did a very good job of talking about social presence, social VR. For us, it's one of the biggest opportunities in the whole sector. Again, as Teppei was talking about, right now what we're seeing is early examples of sort of asset capture and sharing, like 8eyes and Uncorporeals and others are coming in the market, creating this assets that have infinite life cycle, right? You can capture your family members talking, speaking, and they will be with you forever. And so, so for brands and celebrities, you can have your rock band capture performing in volumetric sense, and you can drop them in many environments and then commercialize it. So we're looking at social from the communication aspect, we're looking at social from the presence aspect. Because you can have a social experience, you may not feel you're there. Like Greg and I can go take a look at a game together in, say, high fidelity, but we may not feel the presence. I think the presence is another challenge that we're going to see coming in the market. So we're looking at a number of manifestations of that. We just closed a deal. I can't share the name, but it's in the music space. It's a very engaging social platform. You can go dance with your friends. You can listen to your favorite DJ, either performing live or on demand. And it really creates a fun environment that really crosses all the boundaries and locations.
Awesome, thank you. All right, so let's hop over to, I guess this question is directly for you, Rikard. How do founders go about getting money from HTC? It's real simple.
Yeah, I think
Break it down.
When you think about HTC, of course, you're thinking about the headset and the system. But there are a couple of other pillars. So we also run a content business, so Vive Studios, which is sort of first and second party content. So if you have a content idea, you can pitch that and get sort of content financing. I run the global app store, so if you have an existing app or experience, you want to monetize that and make money on that, we can help you with that on a global basis as well. And then, as you heard, ViveX being the accelerator, and then we also are a founding member of the VR VCA, which is sort of an association of venture capitalists which are interested in funding. So, and then in addition, we are making investments in companies as well, like Vive and some of the other ones. So I think that there's the number of ways where you can approach a strategic like HTC, because some of our competitors will probably also have a hardware part, a content part, a marketplace part, and then some sort of innovation piece of it. So I think it's important that when you talk to strategic, you figure out who are you talking to, and maybe get some of those referrals within the team. And maybe it doesn't work, your content idea didn't work, but maybe you're right for the accelerator. So don't give up. And typically, I think that it's typically small teams working with these things in large corporates. So that be patient. But I agree with this notion that if you don't get instant response, then maybe you should play a little bit hard to get, and then see if they chase you or not. So, but I think for us, just to summarize, you can look at the ViveX, you can look at content financing, and then of course if there's traditional sort of corporate development M&A activities as well.
Thank you. So a big question on my mind. I've been in this role for about 5 months, and I've seen very few women founders. I've gotten very few women pitches from women founders, and I know you started Women in Tech. So I'm wondering what can we do as investors to encourage more women to think that their presentation is ready and to go ahead and ask for it? Like what can we do, and what would you recommend? I know you had some really interesting statistics on the phone when we talked.
Yeah, I think, so I'm from Sweden, which is, probably one of the more equal countries in the world. So of course, women's rights and equalities is sort of top of our mind at home. But I think that the trick here is actually to inspire talent, because I think that in order for us to create a successful VR industry, we need diversity. We need people from all over the world, from all religions, from all countries, but also we need men and women, because if we're going to move past the first sort of gaming, hardcore entertainment phases, we need people with ideas, which is much broader than that. So if you look at the PC revolution, web revolution, mobile revolution, it started with communication and gaming services, and eventually, you're doing it for social, for fitness, for media and news. So we need that diversity. So as an industry, then, we need to be able to attract those talents pretty early on. And I think that it's an interesting article in Harvard Business Review today, actually, which basically says that women founders in sort of hard tech companies is only like 9%. So in contrast, then 9%, 50% of the U.S. workforce is women, and I think that 35-40% of all SMBs, small businesses, is owned majority by women, but only 9% in our industry. And the article goes to argue that actually, in order to be successful, the VC companies needs to have women partners. Because only then do they see the true value and can do the true coaching to make sure that it becomes a successful exit. I don't know if that's true or not, but I do think that we need to start early. So I think it's important that the tech companies like ours, have a good policy and trying to create an attractive environment for women talent, and also that the VCs who are steering the money put the money and can coach those founders in a good way.
So would you encourage founders to go out and look for women co-founders? I mean, with that.
No, I
there's a lack
I encourage the VCs to have
well.
some female general partners who are,
Yeah.
you know, attracting the right kind of talents and coaching them to be successful. And I think the same thing for technology companies. It's, of course, I think in the computer science and math-related jobs today, 27% are women or so. So it is very male-dominated. We all know that, but we also know it needs to change, and we need to do it together because otherwise it's not going to happen.
I can tell you from our experience, we have 9 companies in the portfolio. A third of them have women co-founder and execs in the founding team, and 2 of them were actually founded by the woman designer or architect or technologist. So, and Jennifer Liu joined us recently as an executive in residence in our firm. So we really want to have a great balance between both sides. As Rikard said, I think there's really established data shows that when you have balanced management team and core team and investors, you have better results overall. So our hope is to have half of our companies or more headed by great women execs, and there are some in the audience. I don't know, Nikki is here. She has a great VR game studio in Ireland, and Melanie's here. She has a great studio from New Brunswick. And anyway, but we're seeing more and more really execs coming into the space. I think that's the beauty of VR AR. It really creates an open field for everyone.
Yeah, every woman I talk to and give a demo to has an idea for a VR experience, like pretty much 100%. So I hope to see more of those pitches soon. So Gavin, you wrote a really interesting blog post about what Silicon Valley has to learn from Hollywood about investing in content. I'd love to hear more about that.
Sure. So I think it touches on one of the comments that Rikard made around different types of financing models, right? So I think in the early stages of any new ecosystem where there aren't yet proof points, you're going to see equity financing being the dominant method upon which companies get funded. And it's a very expensive form of capital raising. I think as industries get more mature, you start to see parallels from other industries take hold that are less expensive forms of financing, right? Whether that's debt or content financing or title-specific financing models. So in the case of VR, my view is that as the market matures, at least for the media end of the spectrum, so that's animation, it's film, live action created content, and it's games to some degree, I think you'll start to see Hollywood-type models, meaning publisher type models, or co-production company type models start to take hold. Meaning instead of raising venture financing dollars from Sandhill or venture capitalists like ourselves, there will be strategics, HTC funds of the world, GREE as well has been very active here, where milestones tied to investment are really around, call it commercial terms linked to downstream future revenue share versus equity ownership up front, right? And I think that's the way that typically Hollywood studios create movies and how increasingly the gaming industry is financing franchise sort of multi-generational hits. And so, I think over time it makes sense as a content creator in VR and also in AR to think about some of these models because they can help to offset the more expensive sources of capital from traditional venture.
Thanks. Do you want to add to that in regards to the studio, how the studio funds content at HTC?
How it works?
Yeah, exactly.
Yeah, I mean, it is very easy. So that, we think that games is, it's happening. We all see that. But I think if you have an idea in some of the other verticals, say in creativity or social or in commerce or in discovery, whatever it might be, it's very easy. You basically pitch. It's a 6-page document where it basically outlines your idea. What are some of the mechanics? What's the product plan? What's the budget? And what's the team that's going to deliver on it? And then we look at that, and if we like it, we'll invite you. You can sort of have a discussion. And we do that on a bi-weekly basis.
Oh, I think that's really useful information. So every 2 weeks, you guys go through anybody's projects who presents a 6-page document. That's, and the check size?
So I think the check size is probably from $50,000 to $1 million.
Awesome.
It could also be that you don't necessarily take the whole check size, but we will partner with some of it as well.
And I guess just to finish off, what about monetization in VR? I know it's early, but what kind of companies, what kind of tools do you think are needed to monetize VR?
I think what we're trying to do is we want to make sure that developers and creators can make a business, a viable business. And I think that, so therefore we're trying to promote models where you have users pay for content, so pay to download, for example. Or maybe you have, I think we're becoming, with Netflix and YouTube, we're becoming more sort of snackable episodic content. And I do think having like a subscription model or so is something as well. But trying to charge for your content, I think it's a risk if we go too early in what happened with mobile, where you have this freemium model, you have to give it away for free, and then eventually you have in-app purchase or some sort of later monetization. That works really well when you have an enormous sort of installed base, because then you get the scale. In the beginning, you're not going to do that, which means that all of our creators and those, they need to have money here and now a little bit, otherwise they have to go to Sand Hill Road and ask for more, and that is maybe not in the interest of the VCs to fund the entire ecosystem. So we need to help these creators and developers make money now. So I think I would recommend charging for content now and teaching the consumers that premium quality content costs money.
Yeah, I think that the consumer market for monetization will look like in-app purchase over time and mobile monetization for games. And it will look like over-the-top distributions of digital media, which is largely advertising driven off of large numbers of eyeballs for non-gaming media. And I think on the enterprise side, it'll look like production services up front with some degree of SaaS or per-seat licensing down the road. I think those are going to be the dominant type models. I think absolutely agree with Rikard that the nirvana here, if you're a consumer startup, is to charge consumers, right? But right now, the nature of install base for VR HMDs in the West is, you're looking at high single-digit millions of units, which is not really enough if you think about, the sort of relative scale of the mobile ecosystem to generate meaningful user pay revenue in 2016. So what I think you need to look for are what are the things that will allow you to be well-placed vis-a-vis competition in 2017 and beyond when that consumer pay market opens up, right? And so that means probably not putting a paywall up front or being thoughtful in how you version freemium versus premium. All the same questions that if you were a mobile game developer, you're already thinking about, right? But translated to the VR world. And I think with enterprise, right, which we haven't spoken about so much here, if you're selling in B2B or B2C, there are also corollaries around SaaS pricing and production pricing that can be valuable lessons from adjacent spaces.
Yeah,
Can
overall,
I just a quick comment?
Go ahead.
Since I don't agree with you, we need a panel where we don't agree. So.
It happened.
But so I think with the penetration is pretty low. I agree with you that sort of pay to download has its limitations. However, I ran global advertising for Google as a marketing director, and I can just tell you that if penetration is very low, of course advertisers will be very reluctant as well because you have no effect. However, if we all remember sort of the Procter & Gamble days and the soap operas and how brands finance early television, I do think that there is an opportunity for brands to help finance great content and experiences. So like North Face is funding Jones Nepal experience, etc. So that I think that's a model where it's not so much advertising in your face, but actually you have a brand that stands for something that gives you as a consumer a great experience. And I think that model is interesting to explore. And I think if we can convince some brands, they would also chip in on that content financing, I think.
I would consider, I totally agree. That's a good point, actually. I stand corrected. I think that brought to you
should
by...
haggle with me.
I was coming to that part. So I think brought to you by Red Bull or brought to you by Absolute, that type of model of brand engagement makes sense.
In that combination.
Potentially, yeah. I do, though, almost bucket that into production services, right? Because the way you get paid for that is you're being paid to do work versus paid to show eyeballs against media. And so that was sort of my comment around selling more to enterprise and consumer. But the point is well taken.
Yeah, from a startup investor perspective, I would look at economic models or monetization in line with your funding strategy. A lot of times, if you look at sort of seed and A round general expectations that entrepreneurs will miss 90% of their top line forecast, but they'll be close to their operating expense forecast. So you create this economic model expectations that are not in line with your, with market realities, and as a result, you go out there with unreasonable fundraising strategy, and then within 9 months you're running out of money. So I would look at it holistically in market dynamics and in monetization and your funding needs, and then sort of look at it from a sort of conservative perspective, because we know that there's an exuberance of the entrepreneur when they put together their business plan. On the monetization, you really have to sort of look at 3 to 4 years ago what happened in mobile gaming front. Economic models follow market realities, right? You have to have certain key elements to monetize. So right now, on the high end, you have a premium model that you pay whatever $4.99 to $49.99, and even at low volumes, you can really get decent income and then really learn from it. And then as the install base grows and you can start moving into freemium, I was looking at the 2011 dynamics. In 2011, in the US, there were 100 plus million smartphones. All of a sudden, economic models switched from premium to freemium. That sort of became the sort of critical mass for US mobile smartphone market. And I joined PlayFirst at the end of 2011. And our model, second half of 2011, was all freemium driven from premium. So you really have to sort of adjust your investment strategy or growth strategy to monetization. Another aspect is really, I won't do what Natacha did, which is shameless promotion of your portfolio, but I'll do a little bit of it. We were investors in Immersive, which is right now a leading mobile VR ad network. And what they're doing is providing a platform for brands to express themselves, say, a game brought to you by Red Bull or American Express or such and such. So that really, the early aspects of this market growth is brand presence, brand extension to the new medium, and eventually they'll transform into what really happens on the mobile gaming front.
I just want to add one thing that because the Marco mentioned about immersive, so we are also in the investor in immersive, and also like back in 2011, GREE bought a company called OpenFaint. So it's pretty similar. It's kind of interesting to see, like especially the indie game players, because they are not really can't afford the a lot of the marketing expense to acquire the users. So they usually work together with the other more small game developers, so that they can kind of send the users to each other. And that's the kind of network the OpenFaint built back in 2011. And we can see the same path for the mobile VR, or more, it can be like a high-end VR as well. So you don't have to really spend money for it, but there are kind of interesting models that you can apply to that back in the 2011 at the mobile game.
I was just thinking, maybe a question to the rest of you as well is that, there are early access, for example, on Steam, where you you charge before it's done. There are Kickstarter campaigns where you basically pitch it, and you have a very strong fan base that are interested, who are basically co-founded. Is that something that you guys see happening in the VR landscape?
I'm not sure.
No, so that if I'm developing a game and experience, rather than actually going to HTC or to you, what you'll do is that everyone who's really passionate about Star Wars and lightsaber fighting, you could have the community basically funding, or that you, So
I think crowdfunding is always an option. It's just that it's not a sustainable option, right? The reason you go to VCs is you have a persistent partner who can provide you patient capital, really. So my advice to you, when you go find an investor, you look for a partner who's been doing it for a while, who's patient and persistent, and will be your partner in the journey, because it's really a journey. But crowdfunding has been very effective for a number of game companies, and that's always an option. From our perspective, the challenge with that is you really have to perform flawlessly. If you don't, there's no follow-on capital coming.
Yeah, I think there are examples of paid premium games from the crowdfunding world that have been successful. I think Star Citizen comes to mind. And when I say successful at fundraising, right? From a pre-order standpoint. Delivering products is an entirely different point to Marco's comment. So I think it is one way that you can go to the well and get non-dilutive capital up front, but you need to deliver at least on the promise of this, or you lose the opportunity to really market, and sort of the entire market sentiment comes back against you. And that can be the death knell when you go and try and raise venture. However, I would say that the broader point around testing sort of preceding demand in certain geographic markets or in certain stores, maybe under a fictitious brand even, so not actually your company, but a product that's sort of under the same umbrella. These are all ways to validate, will this idea actually work, right? And so in mobile gaming, that tactic is often played out in releasing in Australia or the Nordics before you release in North America, right? And it's just a very standard way of thinking about testing before you expand. I think there are ways to employ those tactics in VR as well.
I think Marco has one more comment, and then we'll open it up for questions. So if you guys have questions.
I didn't mean to usurp the time, really. I was going to comment on this related to crowdfunding, is the game budgets. And just advice to the group is, please do not have a 2-3 year epic game development budget. That would be in millions and millions. There's really no appetite in the market for that. And as much as HTC and other strategics would love to see quality, very high quality content coming to the platform, we're in a very different environment. Medium is changing dramatically. People are still learning to operate in this, this magical environment. Our advice to all the game developers, we're investing in a number of them, is get something out there within 9 months. Learn a lot about the market and iterate, but don't get into 2 to 3 year game development that will produce this epic VR experience. By the time you're done, the market may have moved into a very different direction.
All right, cool. Let's open it up to questions. Thank you so much, you guys. This was awesome.
Hello, thank you. The talk was great, the panel. I want to ask if we have content to contact HTC, what will be the best way to do it? Because I am from Argentina, and there we don't have any contact locally. So I don't know if it's by internet or just coming to this event and throw you my card, I don't know.
Yeah, the best thing, give me my card now, and I'll connect you to Joel Breton, who runs our Vive Studios, and make sure you guys connect.
Okay, I will. Thank you.
Can you comment on the place for pre-seed investment and angel investment in VR right now? Maybe there is a place.
Yeah, actually my partner Tipitat put together the first VR accelerator at Rothenberg Ventures. And in terms of pre-seed and seed, options are limited, especially outside Silicon Valley or maybe California. And the investor environment or knowledge is still evolving. This area has been more fortunate than others. There's a number of angels in the market that could write a check from $25K to $300K personally, and we're seeing a lot of sort of pre-seed rounds are up to maybe $300 to $400K. But looking at our current portfolio, we have 9 companies. 3 of them are standard Series A investments. The other 6 are safe investments with some standard cap and discount rates and so forth. It's, the lines are blurring, to be honest, between pre-seed and seed. Some of our seed investments are about 4 million rounds, and some price rounds are also sort of similar range. And some pre-seeds tend to be, the challenge is, maybe the benefit is that when you say, I'm going to raise 200 million, once you get to 200 million, there's other people want to line up and provide more capital to you because the risk is reduced, So lines are blurring, but it's getting more and robust in Silicon Valley, and LA is another area that we see significant pre-seed seed activity.
VR today develops in several directions. There is social, there is gaming, there is cinematic experiences. And in terms of investment landscape today, could you comment on what receives more interest of these areas, what receives less interest?
Yeah, let me take a crack at that, actually. So, looking across the value chain, right, there's hardware, so HMDs themselves and peripherals around it. There are capture stacks, so camera rigs and production software sitting on top of that to take in data and then process it for the purposes of creating VR experiences. There are points of aggregation, so these are your app stores, so some of them controlled by big public companies, others that are trying to be vertical and VR independent app stores. And then there's content itself, which is I think what you're referring to. Cinematic experiences, live experiences, animation, games, user-generated content. So as you look across that value chain, I think, wave one, call it circa 2012, 13, 14 was really around hardware on the capture stack and HMDs. And it was very much a big boys game and a consumer electronics game, right? And I think that has yielded big leaders in this space like Vive and HTC, as well as Oculus, other big platforms. And I think in Asia, you'll start to see new ones emerge. I think where we are in sort of wave 2 and 3 in this ecosystem is moving more towards points of aggregation and ultimately to content. And I think in VR, you'll see that content is king, as it is in other verticals in digital media. Content fundamentally, though, is a hit-driven business, right? So, I think when you talk to folks that are in the business of funding companies that create content on that end of the spectrum, venture investors that get it will lean in, and venture investors that are more perhaps tech-oriented may take a little bit longer to get there. So with that lens in place, I think if you look at what those verticals are, you'll see digital media companies want to invest in live action, cinematic, and digital media content, and you'll see gaming companies and strategics and venture funds that are more accustomed to the gaming world invest in gaming content, right? And I think you start to see within each of those vertical areas of digital media, there are leaders that have emerged that have all, I can think of 3 or 4 in each of those categories that have raised, high double-digit millions through the Series B stage that are sort of in revenue, if you will. Not a lot of revenue because the market is early. So I think we're at that stage now where I think the first wave of venture has moved into the space, and increasingly you're going to see strategic dollars and international dollars come in from sources like China that will want to take IP, transfer it across both sides of the Pacific and other parts of the world, and help to accelerate that growth. So look out for those kinds of increasingly sort of supersized scale rounds for companies that generate media in VR.
Question regarding landscape across the U.S. and even outside. When you look at other cities outside of San Francisco, L.A., New York, Seattle, and then other cities around the world, what talent are you looking for in those cities? How do you see VR in those cities from your investment perspectives?
So we also invested about 8 companies so far. The allocation is kind of spread out. So 3 from New York City and 4 from the LA and 2 from the San Francisco. So I see because of the history of the industry growth, I guess we see a lot of contents play in both in LA and a little bit from the San Francisco, and New York City is more like we see a lot of the enterprise application and also some artistic and cinematic video distribution companies. So there are certain characteristic between depending on the companies, depending on the location and also the cities that they are coming from, and that's because of the customers are there and also the talents are there.
I just wanted to add that for us, it's really important for me when I'm looking at a company to know that they're in a large ecosystem of VR, because there's so many things that we just don't need to reinvent. There's been a lot of mistakes made. Other companies have solved different facets of it, so we just want to see companies that can iterate quickly within that ecosystem. I think that's really important. So wherever that is a plus.
Hi, my question is mostly in the monetization in the VR section. So I come from a mobile background. I've seen the whole in-app purchases and microtransactions take over. My question mostly is do you see any transition happening? Are there going to be any new medium of monetization within the VR ecosystem, or is it going to be an overlap between non-VR and VR? And following that is if there is a small studio that's building content versus a platform that solves this monetization problem, at this current stage of VR ecosystem, should they be focusing mostly on the core problem of monetization or content?
Yeah, so I personally went through this myself, transitioning from premium to freemium. You can't really do freemium right now. You can't do in-app purchasing and really make a dent, just because you don't have the install base, right? And at the end of this year, we may have maybe 3-4 million Gear VRs, and then if you're in China, you would probably have another 5 million mobile VR headsets and so forth. But you don't have the economic infrastructure to monetize through in-app purchasing. So what you would do, in my opinion, and there's also different beliefs in monetization for gaming. Some people use all these compulsion loops and so forth, and some people do it based on frustration. I've always thought in my team was really always based on rewards. Really give you a positive experience. You get to progression pinch point or something, and based on the positive experience, we try to monetize it. On VR, you should see similar. At this point, I would really urge you guys to focus on delivering this magical experience. And if you have that, you'll have the monetization capability, but it's just too early to really get into creating a game design and progression model that will have the standard in-app purchasing dynamics for mobile VR. It's just not there. However, if you do a great experience, you can have maybe a pay gate type of stuff that Gavin was talking about toward the end and say, hey, if you really enjoyed this game, give us $199 or $299. Or you could work with immersive and then have and sort of branded ad, brand IP, sort of advertising in the game. But just too early for the standard mobile tricks.
Yeah, I would say I want to see the magic in monetization. So I want to see something magical that makes me want to pay. Give me that. Like that's like something that could be great. So which is probably immersive.
I think one of the interesting we launched our app store in China, and I think that the rise of sort of public VR, think of like the internet cafes and the arcades where you will have VR devices as well, is really happening. It's really starting to take off in China and I think in Asia. And I do think that there's an opportunity for all those arcades close to the cinema or other things. So I think that the amount that you pay for an experience there is much, much higher. So, for example, a 10-minute experience in the Vive would be 100 RMB, which is essentially $15, and then or less, just less, or maybe a short experience. But you pay somewhere between $5 to $15 for an experience there, and I think there's an opportunity to build an ecosystem where a lot of this money goes back to the developers. So it's a new way for you to monetize your content and experiences as well.
Yeah, offline experiences are really cool and you can charge a lot for them. So think about growing your game.
So I have a question, and maybe I'm wrong about this, but the traditional thinking about venture capital is all a relationship about money, like give me money so I can build my game and then we can make money on the profits of it. But what about when you're a studio that more than money, what you're seeking is mentorship? I mean, the venture capitalists have a great resource of knowledge and experience that some of us developers really could use just to position ourselves better so we can deliver a better product, even if not tied directly to the immediate funding of it. Is there any way to go around that, like seeking the attention, mentorship, or even the help from the experienced people like you to help us do better products and hopefully grow the partnership?
I don't think so. I really don't think you should come to a VC to mentor you, build your company in terms of game design and game development. Just because that's not scalable from a VC perspective. I'm just giving you a straight answer versus, yeah, we'll help everyone and all that. Just because, venture model is really a lazy model when you think about early stage, especially early stage because there's so much hand-holding. You can't really scale it. You have 24 companies in the portfolio, typically 3 partners. So each partner has 7 active portfolio boards, plus all the deal flow, plus the past and everything else. If you try to mentor as much as you like the person, you just can't do it. So what you do is you say, this again, a venture lazy model means that you really bet on great teams, hope that they will deliver, and hope that they will figure out the path as the market evolves and so forth. So that's really the ideal early stage investment model. From our perspective, we love this space. We love to work with entrepreneurs. It's just that relationship has to be based on like key factors that we can help you. And we don't want to put together your strategy. That means they're not ready for venture capital. That shouldn't be our job. It really should be team's job. But if you say, hey, I'm about to sign a deal with so-and-so, HTC, maybe a strategic partnership, what do you think? What should be the license? We help you with certain areas. But overall, this mentor tight bonding, as much as we would love to, we just can't do it. It's not scalable.
I think the key areas, maybe in a sentence, the key areas where a venture investor can help you, and I agree with everything Marco said, are around hiring, scaling, corporate finance, so questions around when you go back to the well for more capital, and frankly, questions about when it makes sense to change the direction of your business. I think those are really the core areas where you can go to your board member, and hopefully they have experience in your area, and they can bring you kind of to the next level and be a sounding board. But I agree in terms of management that that's really not the core focus of what a VC does.
Okay.
Great answer, and thank you. Thanks everyone for all the questions, and feel free to email us.